The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I treasure your presence here today, and my outcome is to help you to become a better money master. I am absolutely here to inspire you, but mostly lay the groundwork to help you to lead an inspired life, folks, because leading an inspired life, to me, that's what it is all about. Now, my personal outcome, each and every day, every moment of every day is always to become better at what it is that I do. I call this increasing my skill set. So when it comes to skill sets out there, don't wish it was easier. Wish it were just simply better. Might want to write that down. In fact, don't wish for less problems, folks. Just wish for more skills out there. And don't wish for less challenges, because we all love to be challenged. What you want, folks, you want to wish for more wisdom. You've either got to modify your dreams, and you don't want to modify your dreams. You either modify your dreams, folks, or you magnify your skills out there. Think about it like this. We always talk about one of my hammers. So if we were to use a hammer as a tool, maybe as a skill, you could take a tree and you could cut it down with a hammer. But how long do you think it would take you to cut down that tree with that hammer? I'd venture to say, of course, I'm not telling you how big that tree is, but I'd say probably takes about 30 days to cut down a tree with a hammer. But if you traded in that hammer for an axe, folks, you could cut down that tree in 30 minutes. What's the difference between 30 days and 30 minutes, folks? That's what I call skill. The key to life, folks, is to become more by becoming more skillful. Hide your need, folks, and show your skill. That's how we're starting our Monday. This is July 4th week, and it's going to be a shortened trading week for sure. Tomorrow you've got the markets open till 1 o'clock Eastern Standard Time, closed on Wednesday. No three-day weekend here, though. We'll be back at it come Thursday and Friday as well. Our call number, 877-927-6648. Friday, big day. In the markets, you had the Dow up 2.2%. You had the composite up 3%, up 85 points. The New York Stock Exchange up big as well, up 2.7%. The Russell 2000 big as well, up 2.9% right now in the futures marketplace. Dow futures are flat. ES Mini is flat as well. Trading out 1358. Even Steven, you've got the NASDAQ out at 2612. Russell 2000 up 0.3 point this morning, up 2.5 points. King Dollar, though, King Dollar on the move. Can't keep a good king down. Up 19 ticks, trading out at 81.95. Gold off $10. Silver off 17 cents right now. Light sweet crude, pretty much. It's up down $1. I guess I was looking at high-grade copper, down 2 pennies. If you take a quick tour around the world, as far as the world markets, you've got the DAX up 77 points. That's up a little over 1%. The FTSE up 0.5%. That's up 31 points. The Nikkei, interesting. The Nikkei opened up, popped up last night, traded off the entire evening, closed at its session lows. You had the Hang Seng up 2%, up 416 points. I think they were open. And you had the Shanghai completely flat out there. Our call number again, 877-927-6648. Now today, folks, today is a 3-planetary index date. So this is a day that typically marks a high or a low, short-term high or low in the marketplace. What we have yesterday, we had the moon, the lunar cycle at perigee. That's when it's closest to us. That happened yesterday, maybe, I don't remember the exact time. Could have been maybe around 6 o'clock in the afternoon. Maybe I can just look through my papers if that's important to you. And tomorrow, it is full moon Tuesday. I can hear that the TFN producer getting ready to howl at the moon here anytime soon. So tomorrow we've got full moon Tuesday. So we got fireworks in the sky, as they say. So let's take a look. If you take a look at the 120-minute chart now, folks, you can always follow us on TigerTV. If you are listening on the radio, you can catch this show on Channel 9. And the reason why you want to take a look at this is because we're going to absolutely show you, I'm going to help you to improve your skill set when it comes to trading, whether it's A to B equals C to D or retracement levels. You've got these markets always moving in a breathing pattern. Now, the breathing pattern that we're taking a look at here is on the 120-minute chart. So you can draw these patterns on any charts on any time frame. Just simply have the 120-minute chart up here. We do have one of Steve's hammers. That's what made me think about cutting down a tree with a hammer. I don't want to do that. I'd rather not even use an axe because, an axe might take you 30 minutes, but you could use a poulan, And that would take you about 30 seconds, I think. Now, if you take a look, might fall on a house, though. So we do have a hammer candle out here on the 120-minute chart. This is occurring at 2:30 on June the 28th. Our A point down here on the 120-minute chart coming in at 1:30 in the afternoon on June 25th. It is July. So the low out there is 13:0250. The B point is made right out here at 4:15, coming into the close on June 27th. The high out there, 13:2850. Pulls back, does a 0.618 retracement. That would be my guess. Let's go take a look at it. Let's take our retracement ruler from our low to our high out there, and I was wrong. 0.786 retracement. 3 retracement numbers, folks, that you want to put into your arsenal. 0.382, 0.618, and 0.786. 0.786 retracement on that A to B move, 1308. Where did it actually get down to? It got down to 1306.75. You got to love that. So that became our C point. You came off that C point with a conviction, folks. You had wide price spread right off the bat. That was in the June 28th time frame, the very next candle. And then, of course, we had wide price spread coming in on June 28th into the 11:30 time frame in the evening, and so that was wide price spread. That set up our more than a 1-to-1 A to B equals CD. What the ES Mini on the 120-minute chart has done here, folks, it has done a 1-to-2 A to B equals CD. That price projection, 1359, you actually had it about, I think it was about 4:30 this morning, you had the ES Mini get up to 1362.25. Now there's ABCs within ABCs. You can simply take a look at the ABC coming off of this C point here. And so let's take a look at that. That's the low that we're talking about at 2:30 on June 28th when it was trading out at 1306.75. That'd be your A point. Your B point was the high that it made at coming into 4:15. Your low was made just down here, right at the very next candle, coming into 7:30 on June 28th. So in that C to D leg, you've got an A to B equals CD. That is a 1-to 2.618 A to B equals CD. That price projection, folks, 1362. And as I said, at about 4:30, 410, 440, something like that this morning, you had the ES Mini get up to 1362.25. You got to love that. So what's that set up? That sets up an absolute possible pullback here. You've done your A to B equals CD, so you've done your breathing patterns. Now, we don't know how far, if there is going to be a pullback, how far the market would pull back. We just have to wait for the next A to B equals CD pattern. You can do it on different time frames. What you do have right now, it's trying to make a bearish engulfing candle on the 120-minute chart. We'll switch down to the 10-minute chart, the 30-minute chart, and take a look at what's going on there. But on the longer-term chart here, now, is the bearish engulfing candle. Why do I say that? If you take a look at the close coming in at 7:30 this morning, the candle, close on that is 1359.75. In this session here, you open up at 1359.75. You got a very, very small body out there. So you did make, now when I say you, the ES Mini did make a bearish engulfing candle. I believe it did. Let's take a look at that. I'm taking a look at last night, the close at 7:30. You had 1359.50, open up at 1359.50. You did not get a confirmation on that following candle. That's why the bearish engulfing candle told you it was very likely to fail. Went up and tested it, and right now you're doing the same type of thing. So just kind of hovering out here at that 1358 level, and 2 A to B equals CD patterns out there. What's that all about? Well, that's really all about what's going on in the currency marketplace. And the easiest way to get the synopsis, the summary of the currency marketplace, is just simply take a look at the U.S. dollar index. Why? Because that is the basket of currencies. So you had the U.S. dollar index really with a wide-ranging bar off of the C point, pretty close to off of the C point on Friday. And that's wide price spread, folks. And so with that wide price spread, what it really does set up, that sets up lower prices. Now, it is trading into the swing point. The swing point, if we take a look at it, there's probably several out here. The low on June 19th on the U.S. dollar index, 81.39. Maybe that's it, 81.39. Yeah, 81.39. Now, the high on that, 82.28. You're trading inside there right now. But the way, if you just simply take a look at candles out here, there was wide price spread, most certainly, on the U.S. dollar index on June 21st. And you can see, as you take a look at this candle on the way down, the two meet. You can see that's where you've just simply got the line drawn in the sand here. And it looks like the U.S. dollar index does want to make and complete an A to B equals CD down. That would take you into the $80.58 range, $80.79. Now, you got to realize, folks, this can easily happen overnight. Doesn't have to happen during the day. If it happens during the day, what you'll see our markets trade lower. If it happens overnight, you'll see the futures trade lower. But what you would be doing there, folks, is you would be setting up a Gartley buy. The 0.618 Gartley buy would be at 80.58. Now, you'd have to, it's going to have to clear the B point, the swing point here on the ABC down. That's at the June 19th level. So you got to get the U.S. dollar index below 81.39. Trading out at 81.94 right now. Get our call number 877-927-6648. This is the July 4th weekly edition of the Trader's Edge, folks. Futures markets are flat. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And, with being a marvelous Monday out here, following this show, Tom is still on vacation, so the Money Masters show is going to be myself and Basil Chapman. Basil's going to join me for that full hour, and then Basil's going to go off and do his show from 11 to 12. 12 to 1, we got Larry Pesavento. 3 to 4 is the David White Band and the Tom O'Brien show from 4 to 6 today. Now, what I've done here, folks, is on the ES Mini on the S&P futures contract, just simply drop down here for you on the 10-minute chart. Again, on the 10-minute chart here, showing the ABC within the ABC on that larger 120-minute chart. That was the 1 to 2.618. That completed right out here. It completed this morning. Actual time frame was 4:50. So I was off on my time frames this morning here on the 10-minute chart. Now, what you'll also notice off of that smaller ABCD, the inside that CD leg on the 120-minute chart, what you will also notice here is that what occurred so far today is this is the first ABC down that occurred ever since coming off of the lows here on the 10-minute chart. The lows being established out here at about 240, 250 on June 28th. All the way up there, not an A to B equals CD down at all, not until you complete the 1 to 2.618, A to B equals CD. So, what you want to pay attention to is this now going to start a series. This was a small 1-to-1 A to B equals CD, and it had the confirmation. You had the bearish engulfing that occurred at 5. Next candle confirmed it, and that set up your A point was right up here at the highs at 450, out at the 1362 area. Your B point came all the way down into 620 this morning as it made a low of 1357. It then retraces up into the high at 7:30 in the morning. If we take a look at what that retracement was, very likely to be one of our Fibonacci numbers. The 0.618 area, 1360. It actually got up to 1360.75. Was 1360 and a quarter. So, you got to love that. That set up our C point, a 1-to-1 A to B equals CD. We can see price moving just simply along that same C to D axis. The price projection of the 1-to-1 A to B equals CD, 1355.50. Excuse me. Where does it get down to at 8:30 this morning? 1355.50. Gotta love that. Excuse me while I clear my throat there. So we'll have to watch the 10-minute chart. 10-minute chart right now giving us good pattern recognition. That 1-to-1 A to B equals CD coming down to that big up thrust at 420 this morning in the ES Mini out there. Let's go take a look at what's going on inside the ETFs before the market opens up here in just a few minutes, in about 3 minutes. And also, while we do that, let's take a look here at what is popping, what is dropping. So leading to the upside here, you've got Lincare Holdings, LNCR. They closed at 34.02. Their last trade just closed out at 41.30. You've got Cell, CELL, Brightpoint. They closed out at 541. They're trading out at 887. So that's a big pop. You got Amylin Pharmaceuticals. I think that was a buyout, maybe not. They closed at 2820. They're trading at 3655. Ampio Pharmaceuticals, AMPE, closed at 508. They're trading at $6. Popping to the downside, you've got the UVXY. What is the UVXY? That is the ProShares Ultra VIX short out there. That just messed everything up. That closed out at 984, trade at 939. You've got the UNG. That is the ETF for natural gas. That closed out at 1929. Last trade just fired off at 1889. A big deal out there. So not a lot. You got Ford. Let's see. Ford closed at 959, down 10 cents. So not much really in the way of dropping to the downside. So let's look at the small caps first. The small caps were able to. We're talking about the IWM. If you take a look at the B point on this, You'd go out on June 19th, 79.08 is the high. You've got 79.08 as the high on June 20th. June 19th, you did 66 million shares, 54 million shares on the 20th. Yesterday. Friday, you get up over that area with 71 million shares. So the small caps giving you a confirmed A to B equals C to up. If you take a look at where that price projection is, the 1-to-1 takes you to 81.56. What's at 81.56? May 3rd, folks, out there. You're also really into May Day, the May highs out there. So it looks like that's where the small caps want to travel. Now, the small caps are absolutely going to run into some turbulence here. Where right now where it's at, it's the downdraft of April 10th. That had 101 million shares. So you're in that bar on lighter volume. The high of that, $80.16. The low, $78.14. That's the area that you want to watch if you are inside a small cap trade. 877-927-6648. Futures are pretty much flat, folks. Give us a call.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Got the flat market out there, folks. S&P's flat, composite down 2, Russell 2000 up 1. And I must have a data feed problem. I apologize because I can't tell you where the Dow is at out there. That's frustrating. Let's take a look at what is popping, though, what is dropping in the markets. Again, Lincare, LNCR, up a big 21% out there. Sell, Brightpoint, they must have a buyout here. They're up 64% right now. Let's see here. Ingram Micro, okay, expects to fund buy-point transaction. Okay, so they're going to be bought by Ingram Micro. Good friend of mine used to run Ingram Micro before he retired. You've got Amlin Pharmaceuticals up $2.50, up 8%. You've got Apollo Group, APOL, up 4% out there. Apple trading up $1.89. That's up 0.3%. Marathon Petroleum, MPC, trading up about $1.50 this morning. Best Buy, BBY, up $1.38. IBM, up $1.16. There we go. The Dow is up 6 points. LinkedIn, up $1.44. If you take a look at what is dropping to the downside, Liquidity Services, LQDT. So that's one of the top holdings inside the IBD 50. Down $6. That's down 12%. See if there's any news out on that. No news. You've got Under Armour off 3%, down 288. You've got Open Table, OPEN, off 5%, down 251. Salesforce Innovation, CRM, down 0.7%, off Bach DuPont. DD, the ticker symbol, off 2% this morning. Ulta Salon, boy, they're taking it to the woodshed inside the IBD stocks, looks like this morning. ULTA off 0.7%. Fastenal, FAST off a couple of percent. LIFE, Life Technologies, off 2%, down 90 cents. This Bud is for you, BUD, off a full percentage point, off 79 cents. Baidu, down 48 cents. So that's what's popping or dropping to the downside. Let's go finish off the ETFs out here since we have a flat market. Expect relatively flat market, especially after we had an early fireworks show last week. We were taking a look at the IWM. So the IWM confirming an A to B equals CD up. Let's take a look at that again here. If you do take a look at the retracement off of the highs. Now, the highs in the IWM did not come in May. They came in March 27th, 2012, out there at the 84.66 price point. So if you go all the way down from that high down to the low, that was established on June 4th. What you will see is right in that 786 area, 82.15, 81.56. That's where the IWM wants to travel to. That would set up a test of the May 1st highs. That would set up a Gartley sell pattern. And what you do have up here is, let's see, do you have a gap? No, you don't have a gap up here. And that is where the IWM wants to travel to. Now, while it's traveling in that area, it's got some turbulence. It's got some, bumps ahead of it. The first bump, as I was mentioning, was the high volume downdraft day on April 10th out there. That had 101 million shares. You're trading inside that right now. The high of that is $80.16. You're trading at $79.68. So if you're long this, you're going to want to watch how the IWM handles the $80.16 area. You get a close above it. That's what you want to see if you're long. And if you're short, you don't want to see a close above it. You want to see it get above that and pull back. But you do have a confirmed AB equals CD up in the small caps in the ETF out there. You do not have confirmed A to B equals CDs out there in any of the other ETF indices. If we take a look at the SPY now trading above the B point out there. That B point is June 19th. That high, 136.25, did 137 million shares. You were coming into it. In fact, you got up above it on Friday and closed just below it. You actually got to 136.27. You did that with 212 million shares at 212, pushing 137. That said that certainly it was going to get attacked again today. That's what has occurred. You're up above that area, and if you get above, now volume-wise today, all it's got to really do is take out 137 million shares to get a confirmed A to B equals CD. Now, assume that you do get an A to B equals CD up inside the SPYs here. The question is, where's that going to take you? Well, if we take a look at our A to B equals CD, your A point being the June 4th low on the SPYs, being down at 127.14. The high of June 19th being at 136.27. Pulls back for 4 or 5 trading sessions down to June 25th. That was the new moon, I believe, and that was the new moon out there, and the low out there being 130.85. Remember, tomorrow is a full moon out there. A 1-to-1 A to B equals CD takes you 139.96. That will close the gap from the downdraft of May 3rd to May 4th out there. That'll also get you inside the May 1st highs. You've got some turbulence as you would get up there. You're already inside that area, that being that April 10th downdraft day. So as I pointed out, inside the IWM, which is not trading inside April 10th, the SPYs are 235 million shares. And when and actually the SPYs closed in there, didn't pay attention to that. The SPYs did close in there on Friday. So that was 235 million. And Friday you were pushing 212 million. So not too bad out there. Again, you want to see a close, bullish standpoint, you want to see a close above 136.25, preferably with more than 137 million shares today to give you a confirmed A to B equals CD up in the SPYs. Take a look at the Qs next, and then we'll go over to the diamonds. The Qs really struggling out here. You've got Apple trading up $4 right now, Google up a couple of bucks, but the the Qs unable to launch the June 20th swing point. That June 20th swing point high, 64.57, 51 million shares. You came into it with only 44 million shares on Friday. You are trading inside there. I do expect to see the 64.57 get tagged and hit. On the Qs, you want to be able to see a close above that with more than 51 million shares. Now, the Qs did have a nice hammer. You've got very good confirmed support at 61.54 on the Qs out there. So not only did you have a hammer, you got an explosion off of the C point, so you had a hammer. The C point is the low of that hammer candle. If you take a look at the A, B, C, D pattern that is setting up out there, the A point again being June 4th, the low out there of 60.04, the high being June 20th, the high of 64.57. Thursday's hammer candle, the low out there of 61.54. That sets up your A, B, and C. That sets up a 1-to-1 at the 66.07. If it gets to 66.07, it'll close the gap from May 3rd to May 4th. The low of that gap is at 66.18. Again, setting up a Gartley sell pattern. If you take a look at the retracement off of the highs, the high being April 3rd, 68.55, all the way down to the low on June 4th, which is at 60.04. What you'll see is that just above that 1-to-1 at 66.73, that becomes your 0.786 area. So your area, your target range is 66.06 to 66.73 on the Qs out there. So interesting, folks, that I would think you would want to note that the Qs truly lagging with regard to any type of conviction. And, we'll go take a look at some of these high-flying stocks out there, Liquidity Services, Open Table, Under Armour, Salesforce, Alta Salon. Those are not stocks that you expect to see trading to the downside. We'll see if there's any volume in those today. Those typically, folks, in a market move higher, you're going to see those stocks in the plus category. Now, on the diamonds right now today, taking on the swing point that it didn't do on Friday, that June 19th area, 128.71, had 3.7 million shares. So getting into it with volume was no problem on Friday, did 5.8 million shares. So again, the B point, 128.71. So far this morning, you've gotten up to 128.69. Maybe just building up some energy to truly take it on. If the diamonds can't get above that swing point, the diamonds are trading, I suspect they will. They're trading, again, inside that turbulent zone area of April the 10th out there. Let's take a look at the ABCD formation on the DIA. That A to B equals CD takes you 132.79, folks. That takes you all the way up to the highs of May 1st. May 1st is the most recent high out there. And so it looks like the diamonds actually want to test that area. As it's coming into May 1st, you're going to want to watch the volume. Only has 5.4 million shares up there. So the diamonds will absolutely give us a signal as to the extent of this move in the marketplace. If we take a look at, so let's go take a look at what is popping and what is dropping out here. Just switch over to this tab. So let's go take a look at liquidity services, ticker symbol LQDT, and trading out at $43. Yep, $43. Okay, so this does have volume in it today, and this was a confirmed A to B equals CD down. And so what is the news behind this guy or gal? I don't see any news. Now, I could have a data feed issue here. That is absolutely possible. I know there was a problem with the Dow when we opened up. But this thing has wide price spread already this morning, down with 775,000 shares. So let's take a look at this guy. So that was, maybe still is, the number one. It is not the number one holding. Maybe it got tossed out. No, liquidity services. Number 5 inside the IBD 50 stocks. Even though this was showing institutional selling, the institutional selling on this thing really began on May 17th. May 17th, a downdraft of 1.7 million shares. That was coming, of course, into a gap. So it's kind of maybe a toss of the coin because the gap was on May the 3rd, 1.7 million shares on the way up, 1.7 million shares on the way down. Of course, you got the confirmation on June 20th, 3.4 million shares as was coming off of a C point. Right now, it's tackling the 1 to 1.618 area. Still has not really shown any bullish candle signal at all. Now, what you have to do is you have to switch over into the, let's just switch over. Well, here's where it is coming to. It's coming to this real high volume breakout going all the way back to September 2011. The low is $24. The high is $31.83, and you're trading at $42.90. So hopefully this was a high flyer. Several weeks ago, it was the number one IBD stock out here. And as always, you always have to be careful on any of these stocks when you pull up a chart like this, where you see that the real supply-demand is well below its highs. The supply-demand, meaning the volume and the wide price spread, was always sticking out in the $24 area, and $32 is certainly where this thing wants to head down to. And, it could actually get down there today, folks. Let's take a look at the weekly on this. I think on the weekly you're going to see really the same thing. So you are seeing this come into the February 3rd, 2012 time frame. On a weekly chart, that has 3.8 million shares. This is going to be a shortened week, so you're going to have to do some adjustments and remember that. But again, it does have volume. But more likely where this is headed to, September 2nd, 2011, on the weekly chart out there. And if you take a look at really off of the bottom, if you just take a look at a normal retracement, and let's do that here, that normal retracement coming off the lows going back to when? March 2009, all the way up to the highs out there. Coming back to $28.28, folks, would be a normal retracement. It would be a 0.618 retracement. Of course, you don't like to see that retracement happen with volume on the way down out there. Let's go take a look at Open Table. I believe that was an IPO within the last 6 months out here. OPEN is the ticker symbol. Let's go see what's happening with Open Table this morning. Open Table trading down 8%. Volume doesn't look to be too bad on this. Let's see. Now this is, so this is an IPO going back all the way into May of last year, May 2009. Where the heck have I been? Sorry about that. Of course, take a look at this stock. This stock, folks, traded up to $120, $118, and is trading out at $41 right now. So this thing is absolutely a damaged stock out here. No reason for us, really, quite frankly, to, let me put this on a weekly basis. Might be easier to take a look at. And makes a high, folks. The week of April 29th does that with 5 million shares. Of course, it sells off the very following week with 13.5 million shares. So this has volume off of the top and does not have to get back up there. So hopefully nobody out there in the listening audience is got Open Table inside their portfolio. Let's go take a look at Under Armour, see what Under Armour is doing out there. UA, the ticker symbol, had a decent day on Friday, as did most equities. If you're holding some equities that didn't have a decent day on Friday, with the markets being up 270 points in the Dow and composite, you have to reassess that specific holding, folks. So if you take a look at Under Armour, what Under Armour is trying to do, again, is take out a B point on the daily chart that's going back to May 18th, 2012. That swing point only has 1 million shares in there. It came down into that area with 2 million shares on June 28th. Never got down to the very bottom, but volume-wise told you it was going to go back down there. On Friday, you had 2.6 million shares on that bounce up. Today so far, 245,000 shares in the first 19 minutes of trading. Got the Dow trading up 15, S&P's up 4, composite up 11, small caps up 3. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow up 8 points. S&P's up 3. Small caps up 8. Russell up a couple of points. And the chart that I've got on the screen here right now, featured on Tiger TV, is the DAX. DAX trading out at 65.05. That is up 1 4/10%, up 88 points off of a good close on Friday. Now, what you can take a look at on DAX, I'm going to go ahead and pull this back from a longer time frame. If you take a look at the DAX, we're taking a look at an uptrend channel that began in September 2011. Fairly wide channel that this is trading in. It came out of the downtrend channel, so it was truly a breakout. That breakout, with conviction, was June 1st. What you can see is that the DAX here, I'll go ahead and that was also completed an A to B equals CD down. Then the DAX turns around, makes an A to B equals CD up very close to it, and trying to get back into that uptrend channel on June 21st. It rejects that area, pulls back down today, and it's going to be important taking a look at the close going into 11:30. You'll want to pay attention to Basil's show at the 11:30 mark. Maybe he'll go ahead and pull the DAX up and see if it decides to close inside the uptrend channel, and if so, if it tries to do that closer towards the top of its trading session, or whether it's just testing it and it's going to reject that area. So I think the DAX, I know the DAX is a chart here, as it has been a very weak link out there as it is trying to get back inside that uptrend channel. And folks, Basil's going to join me from 10 to 11 today on the Money Masters show. So stay tuned for that. Then following Money Masters, Basil will do his full hour from 11 to 12. Larry Pesavento 12 to 1. David White from 3 to 4. If we take a look at let's take a look at gold. Gold trading out right now, down $13 at $15.91. Now, gold, folks, I was showing you this downtrend channel in gold and how the top of that downtrend channel had been truly acting as a resistance, as a support area. And the resistance actually had been the 200-day or the 50-day exponential moving average. Gold having a big day on Friday, bouncing off of that trend line, or the channel line, I should say. And you can see how on the Thursday session, that area was tested. It held really right to the line there, which is always pretty amazing. And then it has a big bounce, and it bounces right up into that exponential, that 50-day exponential moving average, folks. At that stage, it was up at the 16.06 area. You actually had gold get into 16.0780. Trading down just a bit this morning, no real volume to the downside. It had nice volume, meaning it did 140,000 shares on the bounce on Friday. I do expect that what we'll see is gold tackle that 200-day exponential moving average. Right now, that is at the 1632 price point. If we take a look at silver, silver had a similar downtrend channel, and what silver actually did here was silver tested that on it's trading inside it versus gold trading on the outside. Gold actually trying to break to the upside, just having a struggling time doing that. In the case of silver, trading inside that downtrend channel and actually tested the swing point that it's dealing with. That swing point is December 29th. The high of that, 27.84. The low there of 26.14. You did have silver test that area, so it was the second test. Did it with volume, 46,000 contracts, versus on December 29th, 32,000 contracts. Again, folks, the Dow is flat. Markets are flat, but the next hour is not going to be flat. It's going to feature Basil Chapman and myself. Stay tuned for that. If you're off to start your day, have a safe one. and I look forward to seeing you tomorrow morning. Take care, folks.